Hi there. I've been getting one question over and over again lately, both from clients, friends, prospective clients, associates, and that is, where do we invest today? People are very nervous. Interest rates are low, so bonds aren't very attractive, and stocks are extremely volatile and frankly richly valued at this point in time. So it feels like risk is building, and this is making people nervous. So let's talk about the things that we found that are working for clients today, and we believe are going to work well into the future, regardless of whether the economy recovers quickly or it takes a bit longer than many are hoping for. So the first area is real estate. There are many, many parts of real estate that are suffering right now, but there are some niche spots and that are accessible to investors today. And the first and my favorite is manufactured housing. Manufactured housing is another way of saying trailer parks and RV parks. There's definitely a shortage of this type of housing and a much higher demand than availability, which are dynamics we're always looking for. These tend to flow very nicely with cash, very stable. Rents have been collected consistently throughout the pandemic in these properties, and and the risk is extremely low. I really like the mobile home space, and for years it was hard to find respectable and decent options there, but we're seeing them in a variety of places today. Second would be necessity-based retail. These are things like supermarkets, CVS, Walgreens stores, auto parts stores, the stuff that didn't close down when the country shut down. These are businesses that are considered essential, and many of them are thriving in today's environment. So this is an area where we're seeing values go up and cash flows be extremely consistent. Number three on my list would be self-storage. Self-storage, again, is a consistent returner. They tend to cash flow very nicely. Um, and in recessionary times, if we look at 2008, um, many of these properties did extremely well because people needed a place to store their stuff as they downsized or just figured out what's next for them. And then finally, medical office buildings. And again, it depends on the medical office building and who the tenants are. We vet these, but people constantly get sick. It doesn't matter what the economy is doing, people will get sick. And so they need to come see medical professionals, have procedures, that sort of thing. And so they tend to be stable cash flow. And in fact, many of these properties have leases on them as long as 30 years. So you have a very, very stable income stream. This is great for people who are looking for alternatives to bonds these days, or looking to create greater cash flow than they can get from dividends or a bond mutual fund. Next up on our list, it would be dynamically asset allocated, algorithm driven, volatility controlled portfolios. That's a mouthful. These are portfolios that are being constantly monitored, I should say, by an algorithm that is looking for momentum and opportunity, not only in that particular segment, but for that particular security. And these are adjusted throughout the trading days. They have a volatility control, which allows them to move to cash if volatility moves up. Many mutual funds and managed portfolios do not have the ability to move to cash. And it's just nice. It's like having an emergency brake on the car. Okay, if your brakes fail, you want to be able to pull that lever and stop the car. It's the same sort of thing. And then finally, fixed annuities. We have some that are like CDs. You can buy a 3, 4, 5 year. We're getting 3 year, what they call multi-year guaranteed annuities. We're getting over 2%. We just got 2.25% for a client last week. And then the other part of the fixed annuity space are called fixed indexed annuities. And these are kind of cool. They have a guarantee of your principal. So if indexes go down, you don't lose any money. You just don't make any money. But I'll tell you what, in 2008, people felt pretty good about earning zero when their friends were losing 40 or 50%. These have generally a choice of index options. So those options can include things like the S&P 500 or the NASDAQ. But these days we also get some of these multi-asset, algorithm-driven, allocation-modeled, volatility controlled indexes. The indexes that we can access through some of these annuities used to only be available to institutional investors with very, very large portfolios. Some required a minimum of 10 million and up. So now we can get access to these on a retail level, and they're designed to give consistent returns. I've seen some of these that have actually outperformed the S&P 500 over the last 15 years. They're not intended to, but some of them have because of the volatility. So if you're interested in any of these tools or options, give the office a call at 415-331-9030. I hope you all stay safe and well, and here's to you having a happy retirement.